And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Yes, we are a stone's throw away from Malibu. It's another beautiful day out there. And I can say I'm pretty happy to be at the battle station here and reporting the Bitcoin news. We've got a bunch of news here today. Bitcoin's still caught in range, and I do want you to wait till the end of this video. I'm going to reveal some price targets that I think are going to be spot on with the break of this range and where Bitcoin could be heading in the short term and a little bit longer term perspective. But I think the big thing to note here is what happened with the inflation coming in hotter than expected last week. And that means the Fed's policy is going to remain tight, which is quantitative tightening. We've got another 75 basis point rate hike the first week of November. And right now the federal funds rate is targeted to be at 5.5% by May of 2023. Bottom line is inflation is going to be here for a long time. It's not going away. And I actually have a graph that shows when the Fed pivots is typically around 5.7%. So when the federal funds rate gets to 5.7%, that's typically when they do pivot. And it's kind of one of those oh no moments, right? When the Fed's like, oh gosh, we got to start printing money again and lower interest rates to stimulate the economy. And I don't want to be the bearer of bad news, but most people think when the Fed pivots, the stock market's going to just start rallying. But that, in fact, is not the case. And what the real case is, so when the Fed pivoted in August of 2007, the market crashed an additional 50% over 18 months. In the dot-com bubble in the year 2000, December 2000, when they pivoted, the market crashed another 38%, and it took 21 months. So this is the Fed pivots going back to 1969, where again, what is the Fed pivot? That means they have an oh crap moment, and they go, we need to start lowering rates and stimulate the economy again. And again, the great old saying, don't fight the Fed, is rhyming more and more true every week. And that shows that, hey, look, if the Fed pivots around 5.7%, the next potential pivot isn't going to be until May of next year. May of 2023. Wow. So that, January, February, March, April. Yeah. So after the first quarter of next year, that's another good 6 months of Fed rate hikes and more pain for the markets. And hopefully it didn't just cancel. Okay. So right now the terminal rate is 3.25%, which you can see right here. It actually says 2.5, but it has not updated. And so right now terminal rate's at 3.25. It is projected to be 4.7 by the end of the year, 5.5% by May of next year. And that means, again, the Fed may not pivot for another 6 months, and that plays into our king dollar narrative here, which, again, the dollar's in a macro breakout, and the next target for the dollar, actually, I'm gonna line this up with our good old fib. So as long as the dollar remains above this 111.65 on the daily time frame, we are still looking good for another bounce to the upside. But a break of this range from the high to the low would give our next target on the dollar when this breaks with any kind of a daily closure back above 114.23. I'm looking for a move up to 116, and the overall target to get hit at about 120. However, I do have a temporary downside bias with a little more downside in place. Yeah, it does look like the dollar does want to come down to this level here. That is the 9 exponential. Also going to be that 236 fib, which is very typical. So short term, as the dollar comes down, which it came down yesterday, this big red, almost bearish engulfing candle, implies some continuation to the downside, maybe down to 111, and that does line up with Bitcoin getting a slight bounce. We did get a slight bounce yesterday, but these bounces are just getting faded earlier and earlier and earlier. Not even really getting continuation off of yesterday's bounce yet. But here's what I would say for CMEs on Bitcoin. We're really looking for just a daily closure above or below this pivot. So we got 18,100 to the downside and 20,500 to the upside. And if you want to mediate on the shorter term time frames, I'm looking for a 4-hour above 19.9 or a 4-hour below 18,785. Likely gets you a shot to the upper side or the lower side of this range. What else did I want to bring up here? So something we haven't reviewed for a while is open interest and the leverage ratio. So right now you can see the amount of leverage in the system is almost at an all-time high. So a big move is coming when there's that much leverage in the system. What else is giving us the downside bias as well is the open interest, currently sitting at about 10.1 billion. Anytime open interest gets above this area right here at, we'll call it 11 to 12 billion, that typically indicates we get a bit of a 25% correction. What else? So open interest, the leverage ratio. Well, I got the economic calendar on the board here as well. I did want to bring up the next piece of major news coming out tomorrow. We don't have anything, and usually the way I look at it is only the high impact events under the USD, the US dollar. Those are the major economic events if you are looking at this chart. On the 18th, oh, it doesn't even say that that is going to be a high impact. Oh, today's the 18th. So tomorrow, where's tomorrow? There it is. So two high impact events, housing starts. So that is new construction, new houses being started, and here's what it says. A higher than expected figure should be seen as bullish for the US dollar, while a lower expected figure should be seen as negative for the US dollar. So, in a sense, the amount of new residential construction products that have started within a certain month. So how much new construction is going on? If the number is higher, bullish for the dollar. If it's lower, bearish for the dollar. So how does that help us out here? Well, it's the expectation versus the reality. So we are already expecting a lower than expected number. If the number comes out higher, which I doubt it will, I doubt that the number will come out higher. So that is, in a sense, going to be bearish for the dollar, right? Because if we had more new construction coming out, that would show more economic activity, more inflation coming. If the home builders are starting to go, holy smokes, a 30-year fix is now at 7%, real estate's going to get crushed, let's slow down things. Well, then that plays into the narrative what the Fed is doing is actually working. But I don't think what they're doing is working. I think they've been putting a Band-Aid on a cut jugular for a long time, and finally the chickens are coming home to roost, or whatever you want to call it, and somebody's got to pay the piper at some point. So let's get on to the 4-hour, and I am showing this coming back from this pivot right here. To me, this is almost a nail in the coffin. for a little bit more of a downside move, any kind of a 4-hour closure here or lower, we'll confirm this as a local high, and we'll confirm several drives of hidden bearish divergence actually coming back from this point if you wanted to use this one. But a more conservative pivot right here is going to show a slew of lower highs. 1, 2, call that 3, call this 4, 5. You might as well call this 6 drives of hidden bearish divergence as the price is making lower highs, RSI is making higher highs. Again, you can see comparing this point, 3 clear stop and reverse points would be this. 1, 2, 3. And call this a 4th, and based off of the 4 drive philosophy, from the high to the low on a bearish retracement, that gives us a shot back to the bottom side of the range, filling in this wick, which I do imagine this wick is going to get filled in. And you almost have this little same pattern right here. It's kind of like a little, I think they call it a shark pattern. I don't know why they call it a shark, but a little bit more bearishly biased. All we want to see is volatility begin to tick up and the price to go in the direction of the trend, which is down. So again, the 4-hour range is going to be more, actually I would use this pivot right here, 19,000 to the downside and 19.9 to the upside. That resolves the shorter term time frame trend. If I'm using the 4 drive philosophy, I'm going to confirm this as a local high in the next minute and expect some continuation to the downside as we are getting the silver cross also to the downside, which can be seen right here as these two cross together and you get all the price action bunched up together. We do have an explosive move coming here. And why do I say that again? Well, let's take a look at the daily. Volatility versus momentum indicators. So the BBWP is on the floor as we get an explosive move above 20%. I know you guys are sick of hearing this. We've been saying it over and over and over, but I do want you guys to mark this off, and that way you can see when this does happen, the average move is going to be 25% when we get this signal, and then the stochastics is going to get the direction of the trend. So the daily stokes are now crossed up on CMEs, which would imply when we get expansion, price goes to the upside. Now, if these do cross back down below 1880 on the daily time frame, and that's pretty much this pivot right here, that would tell us when we get expansion on volatility, the price is going to go down. And currently in this format, price will go up. So where's 25% from here to the upside? 25% is, going to take you to the top side of the range. So I wouldn't say the threat of us, maybe coming back and testing this one more time. There is a threat of that happening. But as for now, if this does confirm as a local high right here, more like a complex high, it'll not look good for, that'll have another drive of bearish divergence, hidden bearish divergence. Coming back from this pivot right here, you'd have 1, 2 drives. This doesn't look like a high yet though. It's not in yet, so it really depends on the dollar. And I would say if the dollar does come down a bit more, can come down as low as 110 and still really maintain kind of the daily uptrend. Well, we got a higher low. This is now confirmed as a lower high. So is that a trend reversal yet? No, we need to make a lower low. So we got the first lower high, we need to make a lower low, and that, based on a candle basis, we just did get a lower low. We got a lower high, lower low. So yeah, I'm leaning towards for a little bit more dollar continuation to the downside. However, Bitcoin lining up a little bit on the bearish side at the moment. So they aren't, a direct sorry, a guaranteed. It's not a guarantee when dollar goes up, Bitcoin goes down, right? It's just been what is statistically likely to happen based off of the results we've been seeing over the past couple of months. Dollar up, bad for Bitcoin. And we're also getting more bearish divergence drives coming back from this high right here on the 4 hour. So, and this is spot price, that'd be 1, 2, 3 drives, and that should give you a shot to the bottom side of the range at a minimum. I'd be looking for Bitcoin to come back down to about 19,000 bucks. If not, if I was playing the silver cross strategy here, I would actually be buying right here, putting the risk management right below the prior wick, which actually would be this guy right here. And I'd be targeting a move up probably to the top side of this channel here at 19.9, which I'm willing to bet that probably lines up with the next fib. If we're using a wick basis, yeah, that's pretty darn close. So if we do get a 4 hour closure back above 19.7, I would expect us to reach the top side of the short-term range at 19,950 on spot price action. So again, more of the boring same thing, but an explosive move is coming again to the tune of 25%. When volatility expands, we'll expect that price to go in the direction of the trend. And what else do we see? The 2-day is on a low, and Stokes will cross down below that 18.8, so that's showing a pivot right there. The 3-day is going to close tonight. We'll cross down below 19.58. Volatility is very low on the 3-day as well. And once again, on the 5-day. Now, the 5-day has produced some pretty significant moves to the upside and to the downside. And the average move on the 5-day signal, again, the 5-day, we're looking for the same thing, expansion off the lows, getting above 20 percentile. That should give us the next 40% move, in my opinion, based on, again, statistical probability. It's not a guarantee, but a 40% move in either direction right now for Bitcoin is going to look very, very nice. And so what would 40% take us to the upside? And even if we did go to the upside, guys, I would expect that move to get faded. We got the death cross coming in on the 5-day time frame, very similar to what we saw in XRP. Again, here was the death cross, a massive rally into that cross, and then we should get spit back out. XRP doing its job to the downside. And how would I mediate this one for, a bit of a bigger move down? Any kind of a daily closure below 44 cents would signify that very, very likely. So honestly, XRP looks like it wants to do this. If I had to guess with some guessy loos. We come in, put in one more higher low for bullish divergence from this point right here. So that would be 1, 2, 3, and get a shot back to the top side of the range, and gets faded one more time, and that will probably be the move down to this level. That's what I would suspect for Mr. Ripple. And that's unless Bitcoin, look, if Bitcoin gets its socks knocked off, you better be willing to bet these altcoins are going to get the same thing. And right now on the daily time frame, you are seeing volatility beginning to expand. We've almost regained the exponential, and you'd want to see these both get a positive slope, and the price will remain, momentum will remain to the downside as long as we're below 48.44. So 48.44 is, pretty much a daily closure back above this wick, and yeah, we're probably going to head back up to the top side of the range, put in another drive of bearish divergence, which this is just regular bearish divergence. Price is making higher highs. RSI is making lower highs. So you had your first drive here, Second drive, it could potentially go for 2 more drives, but typically on the 4th drive, that's when you expect these things to start to happen and the bigger moves to start to shake out. How's the 5-day look? Again, kind of playing out this death cross to a T, and that's what I was getting at on Bitcoin. Now I want to erase those lines. So the 5-day on Bitcoin has the same death cross. So even if we get a pump up into the cross, I would expect that to get faded. And that's because of all the negative economic conditions. The Fed is raising rates. There's about to be a housing crash. You got the war, the energy crisis. You've got inflation coming in hotter than expected. And then you got some of the biggest stocks in the world. I mean, just to name a few, let's take a look at the big ones holding up the market right now. Microsoft, Amazon, and Tesla. These guys have only come down, 38% on Amazon, 46%. So only down 38% right now. Tesla only down from the peak 46%. Microsoft down 36%. So Apple's kind of the only one holding itself up by its bootstraps right here, but even Apple is in a weekly downtrend. Could potentially put in a higher low right here, but earnings season, yeah, so Apple's only down 20%. What do you know? Even Warren Buffett, I think like 25% of his portfolio is in Apple. So if these start to get crushed, which I imagine they will, because look at Nike, look at Facebook down 60%, Netflix, look at that, Roku. I mean, these companies getting crushed, absolutely crushed. Verizon, these are not the epitome of health and fitness. Uber, absolutely getting crushed from the highs. Well, we just filled that gap. That was a big gap. Gap getting filled, and I'm willing to bet we're probably going to get rejected off of this silver cross. A very nice play right there. Again, not financial advice. I'm not a financial advisor, but let's look at how the currencies are doing. The Brazilian real has been holding it up decent against the dollar. The euro popping up today as the dollar came down. The Japanese yen, oh my gosh, what is going on in Japan? These were the guys that invented quantitative easing. After their stock market crash, it never returned to its highs, right? So January 2012 highs were never reached again, and well, that's the Japanese yen, not the stock market, but that would be the Nikkei. And just curious, it looks like broadly the markets across the Eurozone are popping up today, but how is, and so is NASDAQ up 1% today. Nice little bounce on the week so far. However, coming right into this trend line, which I would expect this to hold. If the dollar does not roll over here and just continues to build up strength, this is right where you'd expect the bull traps to come in and play out some more downside. So to me, it looks like a bearish reset for the entire market. We're coming right into the 618 fib, and that would line up with the dollar putting in a bounce off this 21. And the first indicator that you'll see for this turning into a bounce is going to be the 12-hour time frame. If we can start to get a 12-hour closure back above the 618 here at 113, call it 113, 12-hour above there, even a 4-hour back above 113 is going to look good for the dollar putting in a bit of a rally. And we have multiple drives of hidden bullish divergence coming from this pivot right here. You're going to have 1, 2. So how would we confirm this as a local low? Targeting a move at least up to the 618, you need a 4-hour closure above this guy. And to me, it's actually already confirmed with this candle right here. Yeah, that would be the confirmation of this being a local low, and I would expect the dollar to pop up to about 113. So if Bitcoin is got a bearish bias right now, looking for at least a move back down to 19,000 bucks, how's that going to affect other coins like XRP, like ApeCoin, which is getting pretty shafted here, and breaking a trend line to the bottom side of the daily, this massive descending triangle, or ascending, or it's more like a horizontal triangle, however you'd call a flat one. We got some higher lows, we got some lower highs, so a break of this range looks like it's going to break it today. And where would I target the next move? So using Fibonacci, which is what I like to use, and I would mediate it with, yeah, any kind of a closure. You know, first target's going to be this guy at 388 with any kind of a closure here or lower. We're pretty close, but a more aggressive trader would be looking for, and I do believe that would do it, any kind of a closure back below 418. I'm looking for a move back down to this level at the 1618 fib. Do we have the multiple drives of bearish divergence formulating? Let's see. So we're looking for lower highs in price and higher highs in RSI. And so I would be using this pivot. And sometimes you'll have this one kind of fake out where RSI is making a higher high, price is making a higher high. But these drives going back from this pivot right here, you're going to have multiple drives. 1, 2. That one doesn't count. But this one, 3, 4. So technically, this got confirmed as a local high, you know, I'd say right here. And some might have even called it right here. So that would have been your fourth drive of hidden bearish divergence, which on the four drive philosophy does give you a targeted move way down here at 250. So does that line up with anything else on the fib or on the charts in a sense? And to me, close enough is close enough. I would be looking for the bottom side of this range to get tagged. Probably pays a short-term bounce from there. And yeah, so there's my targets on Mr. ApeCoin, another coin that I love to love, and that is good old Mr. Ethereum Classic. And I did see this formulating yesterday for, again, multiple drives of hidden bearish divergence. And we've been saying, look, the bigger they rise, the harder they fall. Ethereum Classic was up 223% when Bitcoin popped up 30%. As Bitcoin has retraced those gains so far, let's see how much from the peak to the trough. So it went down 54%, currently down 48%. I do believe this one is going to head all the way down. First stop, 17.7. Second stop down to 12 bucks. So that's almost a 100% retracement from, this is where the market bounced out of. So according to Charles Dow, you know, there's 100% retracements, 50% retracements, and 75% retracements. That's what he was famous for. So if this thing, I'll use it really simple. So off of this consolidation, and I should be using a daily time frame because we're dealing with larger price action, but yeah, this is kind of the nail in the coffin scenario. Here was a 50% retracement, right? If we would have bounced there and came back up to the highs, that would have been 100% retracement, but 75% retracement. Let's see if that is correct. $75. Anyways, I'm getting a little bit distracted here, but a 50% retracement off of this guy is pretty much what we've already gotten. So it'd be half the distance between here and here. So that looks like 50% to me. Why is it not penciling out? Oh, 48%. Yeah, that's 50%. 100% retracement would be all the way down to the low here. Notice that was July of 2022, right where Bitcoin kind of bottomed out at 17,500. And then the 75% retracement should be coming in at the 618, which that's not going to hold true. But the 75% retracement would be 3/4 of the distance. So from 13 to 45, let's use round numbers, 15 to 45. So essentially we're looking at, $17 to $20 for that 75% retracement. All right, that's enough out of me today. What did I want to cover on interesting news for today? Yes, we got my brother Kanye West. And when I say brother in Christ, man, he converted his life to Jesus, and I salute him for that. But here is our boy here, Kanye West, spotted wearing Satoshi Nakamoto hat after being debanked by JP Morgan. So what exactly happened? And, here's an article, Why Kanye West and Other Free Speech Advocates Need Bitcoin. Well, on October 12th, Candace Owens made the world aware of the fact that Ye West, more commonly known as Kanye West, had his corporate bank account shut down by JP Morgan Chase. This move is seemingly a reaction to comments Ye made over the weekend on social media. And I have to concur with what Owens is saying in the second tweet above. I do not care what you think about Ye, but I do care about what you think of one of the largest banks in the world abruptly rug pulling his multi-million-dollar company bank account. And this all came along the heels of PayPal attempting to implement a $2,500 fine on any users it deems to be exhibiting wrong thinking. So PayPal was quickly forced to, redact or pretend like the policy was just an accident. But this is what the narrative across the world is. Central bank digital currency, then they're going to be able to censor you. So what are guys like Kanye and Elon Musk doing? Not only are they adopting Bitcoin, but they're buying the social media platforms. Elon just bought Twitter. Now, Kanye West is acquiring Parler, a controversial conservative social media site. The company has announced in a statement on Monday, Parliament Technologies, Parliament's parent company, said it was pleased to announce that it had entered into an agreement in principle for Ye, formerly known as Kanye West, to acquire the Parler platform. The acquisition ensures Parler has a future role in creating a uncancelable ecosystem where all voices are welcome. The statement continued in the statement of his own Parler CEO, George Farmer, added, Yee's acquiring of Parler will strengthen our ability to create an uncancelable ecosystem. No one should have to self-censor out of uncertainty about which legal speech will get him or her banned. No individual or business should worry about being completely deplatformed, as Parler was merely for the expression of opposing viewpoints. Groupthink is always and has been more dangerous than independent thinking. Parler will remain a place where everyone can think, listen, and speak freely. We will continue to fight against censorship, cancel culture, and authoritarianism. And fight against the woke movement. You know, I'm going to buy a t-shirt that says, awake, not woke, right? Anyways, I hope you guys have a great, highly blessed, highly favored day. And just be on the lookout for a big momentous move in Bitcoin's price, because volatility is on the floor, not only in the daily time frame, the 2-day, the 3-day, the 5-day, and the weekly is not on the floor yet. And I wonder if we are going to get a weekly reset for CMEs, 2-day, 3-day, and the daily, all on the floor. So going to get a big explosive move. Will it be out of the housing data tomorrow? We'll cover that, whether it comes in, you know, how new manufacturing, right? New construction homes. If there are more new construction homes coming out, bad for the dollar, bullish for the dollar, bad for Bitcoin. On the other side of the fence, if new construction is down and they're building less homes, probably going to be more on the bearish side for the dollar, good for Bitcoin. So let's follow the narrative. I'll keep you up to speed. Have a blessed day. And don't forget, like and subscribe if you're new to the channel. Post a comment below. I'm happy to answer any questions you might have. Take care and have a blessed day.